Hello, this is Whitney back to you with the last video on this series on retirement plans for business owners. And today I'm talking about a non-qualified deferred compensation plan. This is different than the last several plans that we've discussed because especially the 401k plan. And the reason being is that it's not subject to discrimination. You could provide business owner. You could provide this plan to you and no other employees. You have to have a written agreement with that's written by the employer to specify what type of employees are subject to this, or that actually benefit from this. But it's a huge benefit to you as a business owner because you're limited with the 401k plan. You're limited with the simple and SEP with how much you can contribute, $66,000 with the SEP IRA and with 401k. However, with this, that's not the case. I also want to mention last time with the cash balance plan, what's important is for you to know is that even as a solo business owner or even just a partnership, you could do a cash balance plan for that. If you are very profitable and you have low profit margin and you have high profit margins rather, you could do a cash balance plan for a small company such as that. As far as employee size, it's highly profitable, contribute far more than that $66,000 into a 401k. Just wanted to make sure to mention that. So executive deferred compensation plans or non-qualified deferred compensation plans. So there are really three types. One, there's an unfunded promise to pay. So what this allows is there's a risk that this money could go to a creditor. However, when the business owner does receive these funds that are promised to them per the agreement, that's when the executive pays income tax. So the reason that a lot of business owners like these is because it's tax deferral. You get this promise that you're going to receive the funds and then you pay the income tax when you receive it. The only drawback in this one is that you as the employer don't receive a write-off until you, the business owner, or whoever the executive is that receives it, when they actually receive it, when it's called constructive receipt. So that's the only drawback, but frankly, in my opinion, I think it's well worth it because you're promising to pay and you'll get the write-off eventually. Then there are two other types of non-qualified deferred compensation plans. One is the Rabbi Trust. The big difference between these two is that the Rabbi Trust, you actually do put funds aside in that account. Unfunded promise to pay, it's just a promise to pay. Again, no income tax for the executive until they actually receive the money. You need to make sure that there are guardrails on that so that the executive could not be compensated from that money immediately. And the reason for that is because then they have to pay the income taxes on it right away. Then lastly, there's the secular trust. And so there's no risk of forfeiture. This is just an account subject to a vesting schedule for an executive or for you as the owner. And what happens with these is that you receive the tax deduction right away when you fund the account per the vesting schedule. So let's say it's a 5-year vesting schedule. Over those 5 years, you get incremental tax write-offs and then the executive or you as the owner receive the income. I like these because when a company gets bought, these can be written into that purchase plan. Secondly, when you retire, that's when these are, of course, most beneficial because you don't have to pay the income on it later, future income deferred. And again, you could do this just for a select few employees. You could just do this for yourself as the owner. Usually I see it for the most high, for like CEO, the C-suite. And closely held corporations or small sized corporations, this is a really nice plan because the C Corp doesn't have to count this towards retained earnings, even though they are not, and they're not claiming it as income either. So we like that. I hope that this series has been helpful to you. We do not provide tax advice. We do not provide legal advice, but we work with your accountants and attorneys to set up plans like these. I love them all for different reasons. I get really excited about the non-qualified compensation plan, like I just explained, but would love to see how this fits you and your needs. Please call us or email us if you have any questions on how this applies to you. Cheers.